Good morning, everyone. I'm Barbara Vanich, Chief Auditor and Director of Professional Standards at the PCAOB, and it's my pleasure to be with you today. I would like to welcome you to this meeting of the Standards and Emerging Issues Advisory Group of the PCAOB. I want to welcome members, observers, board members, and the public watching this meeting. We have a full agenda today. First, Chair Williams will make a few remarks, then I will provide a brief standard setting update, and the project leaders will provide an overview of the board's recently adopted standard on the auditor's use of confirmations. After that, our Emerging Issues and Auditing Subcommittee will lead a discussion focused on fraud. I would like to thank Preeti, Brian, David, Jim, and Dane for all the work they put in preparing for today's discussion. After lunch, we'll discuss two interim standards that have largely remained unchanged since the board adopted them in 2003. Auditing inventories and use of a service organization. Before we get started, I want to thank all of our members for the time that you devote to this advisory group, especially to those of you whose terms expire at the end of the year. We realize you're all very busy and grateful for your contributions. We have plenty of time built in today for your comments throughout the meeting. As a reminder, if you would like to say something, please use the raise your hand function. If that's not working, just type something in the chat function. No need to write your question, just a call on me or a few characters, whatever works, and we'll make sure we get to you. We will try to call on you in the order that hands are raised. Thank you in advance for your patience. And if you experience any technical difficulties during the meeting, please reach out to Brian Goodnaw. And now my final responsibility is, although others may repeat it, is to state that for all representatives of the PCAOB speaking today, the views expressed by each individual are their own views and do not necessarily reflect views of the board, other board members, or staff. So as mentioned, Chair Williams has some opening remarks. If you don't mind, please hold questions until after the standard setting update. Chair Williams.
Thank you, Barb, and thank you to the members of the Standards and Emerging Issues Advisory Group for joining us today. I also want to welcome George Bodick to his first SEIAG meeting as a board member. Many of you know George well from his 20 years at the PCAOB, including most recently as leader of our Division of Registration and Inspection. I know we are all looking forward to working with George in his new role. Before we begin, I'm going to also provide the standard disclaimer that the views that I express are my own and do not necessarily reflect the views of my fellow board members or the talented and dedicated PCAOB staff. When we met in June, the board had just proposed amendments to give auditors additional direction addressing specific aspects of designing and performing audit procedures that involve technology-assisted analysis of information in electronic form. Since then, we've issued a proposal on a rulemaking project that would hold associated persons accountable when they negligently contribute to affirm violations that put investors at risk. And we voted unanimously to adopt a final confirmation standard and related amendments that had previously been stalled since 2010. In 2023, the board has taken more formal actions on standard setting and rulemaking than any year in the last 10 years. And thanks to the hard work of the dedicated PCAOB staff, we've made incredible progress toward modernizing our standards and rules to better protect investors. And we're just getting started. Later this year, we expect to vote on a proposal to update the follow-on disciplinary proceedings rule. And by the end of 2023, it is anticipated the board will have considered more proposals than any year in PCAOB history, since the first set of standards and rules were proposed 20 years ago. Headed into 2024, our commitment to advancing our ambitious standards, research, and rules agendas on behalf of investors remains stronger than ever, with multiple projects on our short-term agenda. As always, your feedback will be critical as we move forward. In addition to swiftly advancing our short-term agenda, we've also added a project on auditing inventory to our midterm agenda. And we look forward to hearing more on this topic, along with another topic on our midterm agenda, the auditor's consideration of an entity's use of service organizations, during today's meeting. We're also looking forward to hearing a discussion from the Emerging Issues Subcommittee today on fraud. As we continue pushing forward the most ambitious standard-setting agenda and rulemaking agenda in PCAOB history, we're thrilled that Dr. Martin Schmalz joined the PCAOB in August to help inform that work as Chief Economist and the Director of our Office of Economic and Risk Analysis. Martin is a tenured professor of finance and economics at the University of Oxford Said Business School, serving as the academic area head for the Finance, Accounting, Managerial Science, and Economics faculty group. He brings extraordinary experience to the great work of our Office of Economic and Risk Analysis. At the same time, we are continuing to make progress on enhancing our inspections and strengthening our enforcement. To date, we have announced $7.8 million in penalties against those who put investors at risk. With 2 months to go in 2023, that is already higher than the total penalties in each of the 5 years before our record-breaking year in 2022. As you know, earlier this year, we began including new information about independence and other matters in our inspection reports for the first time. And in July, we expanded the tools available on our website to make it easier to find and compare deficiency rates across audit firms. Transparency is one of the most powerful tools the PCAOB has to drive improvements in audit quality. And as noted in our strategic plan, we remain committed to increasing that transparency. Ultimately, the responsibility falls on auditors to correct the problems that led to the deficiencies in their audits. The PCAOB will continue demanding firms do better. We have demonstrated that we will not hesitate to bring enforcement cases against auditors where appropriate, and we will continue to carry out hundreds of inspections each year. At the same time, accountability from audit committees and investors provides a powerful incentive to find solutions. And this is where your influence can make a really big impact. Please use your network to encourage investors and audit committees to review our inspection reports and make use of their findings. Encourage them to take note of which firms are consistently complying with PCAOB standards and which firms are not. Encourage them to apply that knowledge in assessing the auditors of companies where they invest or serve on the board. Share the questions that audit committees should consider asking their audit firm that were included in our July spotlight, including, has our audit engagement been inspected by the PCAOB? Were there any audit areas that required significant discussions with the PCAOB that did not result in a comment form? Has the engagement partner been inspected on other engagements? If so, what were the results of that inspection? And what is the audit firm doing to address overall increased inspection findings? Spread the word that investors can use their influence to engage with investor relations and the audit committees of the company in which they invest, and encourage them to seek out firms with proven track records on quality. With your help, we will continue to drive audit quality forward. I want to echo Barb's thanks to all of the members of the SEIAG, not only for being here today, but for all the time and energy you put into this group. And with that, I'll turn the program back over to Barb.
Thank you, Chair Williams. Before I turn to our standard setting update, I too want to join Chair Williams in welcoming our newest board member, George Bodick. I would also like to underscore how excited we are that Dr. Martin Schmalz decided to join us as our Chief Economist and Director of OERA. As you've heard us say, economists are an integral role as part of our standard setting teams, and so we're very excited to be working with Martin on our ongoing projects. Since we last met, the comment period on our non-compliance with laws and regulation proposal and our proposed amendments related to certain aspects of the auditor's use of technology-assisted analysis both have closed. Our project teams are analyzing comments, and we will be working with the board in upcoming weeks and months as we move forward to advance that agenda. In addition, on September 19th, the board issued a proposal to update Board Rule 3502 that addresses the liability of associated persons who contribute to the registered public accounting firm's violations of the laws, rules, and standards that the PCAOB enforces. The deadline for public comment on that proposal is November 3rd, which is tomorrow. Also, since we last met at the end of September, the board adopted a new standard on the auditor's use of confirmations. Lisa Busidu and Heather Jossam from the Office of the Chief Auditor will shortly give an overview of the final standard, which, subject to approval by the Securities and Exchange Commission, would be effective for audits ending on or after June 15th, 2025. Before I turn to the confirmations team, I do want to touch on the update to our standard setting and research agenda, which occurred earlier this week. So in addition to updating the timing of several short-term standard setting projects to better reflect when the staff anticipate making recommendations to the board, as noted, we added a research project on critical audit matters, where the staff will consider, among other things, recent input from our investor advisory group. At their recent meeting, they made several recommendations regarding critical audit matters, and those recommendations included considering whether the current standard and existing staff guidance is resulting in fewer critical audit matters. They also suggested we consider how to increase the usefulness of critical audit matters. For example, members that presented the recommendation noted that they did not find CAMs that only described how the auditor responded to the CAM particularly useful. We continue to work with the board on all short-term standard setting projects, and the staff continue to make progress on our midterm projects. In addition, we continue to evaluate the interim standards. As a result, as noted, we added a project on auditing inventory and the use of service organizations to the midterm agenda, and we, of course, look forward to hearing from you today on those topics. Lastly, we also added a section on board-issued proposals where we haven't adopted a new standard simply to facilitate finding proposals for users. And with that, let me turn to Lisa Busidu and Heather for an overview of our new use of confirmation standard. Lisa?
Good morning to everyone, and thank you, Barb. On September 28th, the board adopted a new auditing standard, AS 2310, the auditor's use of confirmation. Subject to SEC approval, as Barb already mentioned, it would replace an existing standard that was written over 30 years ago, which has had minimal amendments since it became one of the PCAOB's interim standards in 2003. A standard on confirmation is important for audit quality and investor protection, as the confirmation process touches nearly every audit. Information obtained by the auditor directly from knowledgeable external sources can be an important source of evidence obtained as part of an audit of a company's financial statements. Confirmation has long been used by auditors to obtain such evidence. The board adopted this new standard after substantial public outreach. This includes a concept release and 2 proposals, the most recent, which was issued by the PCAOB less than a year ago. Commenters on the proposal generally supported the objective of improving the confirmation process and suggested areas to further improve the new standard. The existing standard on the confirmation process predates the PCAOB's standards on risk assessment, which were issued in 2010. This new standard addresses how the auditor's use of confirmation works in concert with the risk assessment standards. The PCAOB's risk assessment standards acknowledge that evidence obtained from a knowledgeable source outside the company generally is more reliable than evidence only obtained from internal company sources. When properly designed and executed, the confirmation process can be an effective way of obtaining relevant and reliable external audit evidence, including in situations where the auditor identifies an elevated risk of material misstatement due to error or fraud. The new standard is more expressly integrated with these PCAOB risk assessment standards through incorporating certain risk-based considerations and emphasizing the auditor's responsibilities for obtaining relevant and reliable audit evidence through the confirmation process. The new standard updates existing standards to reflect developments in practice, such as the use of electronic forms of communication between the auditor and the confirming party, and audit techniques that enable the auditor to obtain relevant and reliable audit evidence by directly accessing information maintained by a knowledgeable external source. And lastly, the new standard strengthens the PCAOB requirements in certain areas to focus on the need to obtain reliable audit evidence when executing the confirmation process. We'll highlight next several of those strengthened requirements. Under the new standard, when auditing a company's cash and cash equivalents held by a third party and a company's accounts receivable, the auditor should perform confirmation procedures or otherwise obtain relevant, reliable audit evidence by directly accessing information maintained by a knowledgeable external source. The new standard carries forward the presumption to confirm accounts receivable in existing AS 2310, but more clearly addresses situations when it is not feasible for the auditor to obtain relevant and reliable audit evidence directly from a knowledgeable external source. Under the new standard, if the auditor determines it would not be feasible, based on the auditor's experience and other factors, the auditor should obtain external information indirectly by performing other substantive procedures, including tests of detail. The new standard provides examples of external information obtained indirectly. The new standard also includes a requirement for the auditor to communicate with the audit committee when the auditor did not perform confirmation procedures or otherwise obtain audit evidence by directly accessing information maintained by a knowledgeable external source for significant risks of material misstatement associated with either cash or accounts receivable. This new communication requirement is designed to enhance the audit committee's understanding of the auditor's strategy for addressing significant risks identified in these accounts. Now, I'd like to hand over to my colleague, Heather Jossam, who will discuss some of the additional aspects of the new standard. Heather?
Thank you, Lisa. Good morning, SEIAG members. This morning, I will discuss 3 additional aspects of the new standard. First, the auditor's responsibility to maintain control over the confirmation process. Second, the use of negative confirmation requests. And third, situations in which other procedures should be performed by the auditor as an alternative to confirmation for selected items. The new standard emphasizes the auditor's responsibility to maintain control over the confirmation process, to minimize the likelihood that information exchanged between the auditor and the confirming party is intercepted or altered. This is because the reliability of audit evidence provided by confirmation depends in large part on the auditor's ability to control the integrity of confirmation requests and responses. The new standard provides that the auditor should send confirmation requests directly to the confirming party and receive confirmation response directly from the confirming party. In consideration of comments received on the 2022 proposal, the new standard clarifies how an external auditor can use internal auditors in a direct assistance capacity as part of the confirmation process. In order to maintain control over the confirmation process, the new standard states that the auditor should select the items to be confirmed, send confirmation requests, and receive confirmation responses. In addition, the new standard requires that the auditor perform certain procedures when an intermediary is used to facilitate direct electronic transmission of confirmation requests and responses. The use of an intermediary does not relieve the auditor of the responsibility under PCAOB standards to maintain control over confirmation requests and responses. Because an intermediary's involvement may affect the integrity of information transmitted between the confirming party and the auditor, the new standard provides that the auditor should evaluate the implications of using an intermediary on the reliability of confirmation requests and responses. The new standard specifies certain procedures to be performed as part of the evaluation, including obtaining an understanding of the intermediary's controls that address the risk of interception and alteration, determining whether such controls are designed and operating effectively, and assessing the relationship of the intermediary with the company. The new standard also clarifies that when the auditor determines the risk of interception and alteration of confirmation requests and responses at the intermediary is not addressed, the auditor should not use an intermediary to send confirmation requests or confirmation responses. Next, I will discuss the use of negative confirmation requests under the new standard. With a negative confirmation request, the auditor requests a confirmation response only if the confirming party disagrees with the information provided in the request. The auditor generally obtains significantly less audit evidence when using negative confirmation requests than when using positive confirmation requests, because the auditor typically doesn't receive a confirmation response unless the confirming party disagrees with the information provided in the request. The new standard acknowledges the limited evidence provided by negative confirmation requests and states that the use of negative confirmation requests alone does not provide sufficient appropriate audit evidence for addressing the risk of material misstatement to a financial statement assertion. Finally, I'll discuss situations when the auditor performs other procedures as an alternative to confirmation procedures for selected items, also referred to as alternative procedures. Under the new standard, alternative procedures are substantive audit procedures that an auditor performs when they are unable to obtain relevant and reliable audit evidence about one or more items selected for confirmation. The new standard provides more specific direction for circumstances where the auditor is unable to obtain relevant and reliable audit evidence through confirmation. The new standard identifies certain situations involving confirmation where the auditor should perform alternative procedures for selected items. The first such situation is when the auditor is unable to identify a confirming party who would provide relevant and reliable audit evidence in response to a confirmation request. The second is when the auditor is unable to determine if a confirmation response is reliable. And the third is in the case of a non-response or an incomplete response. In addition, the new standard provides that the auditor should perform alternative procedures when the auditor is not able to use an intermediary, yet would be unable to send confirmation requests for selected items without the use of an intermediary. The new standard includes examples of alternative procedures that may provide relevant and reliable audit evidence for selected items of cash, accounts receivable, accounts payable, and for terms of a transaction or agreement. These provisions expanded upon the alternative procedures discussed in the existing standard on confirmation. Additionally, to remind auditors that the auditor's assessment of risks of material misstatement, including fraud risks, should continue throughout the audit, including the confirmation process, the new standard states that when the auditor is unable to obtain relevant and reliable audit evidence about the selected item through confirmation, the auditor should evaluate the implications for the auditor's assessment of the relevant risks of material misstatement. The rulemaking also includes amendments to several of the board's auditing standards to conform to the requirements of the new standard. This concludes our prepared remarks. I'll hand over once again to Barb for any additional remarks.
Thank you, Lisa and Heather. I'll pause here to see if there are any questions from members or observers.
Barb, there are no questions so far.
Okay, well, thank you very much for that. With that, let's turn to the second item on our agenda. As mentioned, our Emerging Issues and Auditing Subcommittee will lead that discussion. They've been very busy putting together a great panel and discussion for today, and so I will hand it over to them. Thank you.
Brian, your hand is up.
Yeah, I'm sorry, Barb. Could I just go back? I didn't realize you were, I thought we were kind of maybe just on confirms, but maybe just broadly relative to the standard setting update, if I could make a comment?
Certainly.
Yeah, so thanks for the update and congratulations on all the great work to advance not only final but proposals and final standards but proposals. Certainly I've been long a proponent of seeing the PCAOB advanced performance standards more quickly, and I think it's you're certainly doing that. So congratulations again. One question I had was with respect to the NOCLAR proposal, which obviously attracted a good amount of attention and probably almost as much comment as you've received on anything over the years, other than maybe ICFR. I know a lot of comments, including my firm's comment letter, certainly suggested that perhaps there'd be some benefit to incremental discussion, outreach, and the like. I know it's not on this agenda. I'm curious whether there's a plan, perhaps, or thought relative to having some incremental discussion and outreach. And I did note on the summary that came out yesterday of all of the good work that's been done. At least the current plan seems to be to try to adopt that as final in 2024. And I also wondered, given the extent of feedback, if that might be something that you might even be considering at some point reproposal on, and so I was surprised to see maybe that it would necessarily be adopted next year. And I know these are plans, so things maybe could change, but I wondered if you might comment on any of that.
Yeah, sure. Happy to, Brian. The NoCLAR team is currently scheduling some calls with commenters, particularly those who gave suggestions where we might want to understand a little better how commenters envisioned it working. And then with that, we will be working with the board to see what other kind of outreach, if any, they would like us to do.
Thank you.
I don't see any other hands.
No.
But okay. All right. Well, Emerging Issues Subcommittee, please go ahead. Thank you.
Someone gonna load the slides? Oh, great. Good morning, everyone. My name is Preeti Chowdhury. I'm a full professor at the Dhaliwal Reedy School of Accountancy, the University of Arizona. I'm happy to be chairing the Emerging Issues Subcommittee. And as Barb mentioned, there are several other members who work with me on this committee: Dane Mott, Jim Hunt, Brian Croto, and David Fabricant. You may recall in our last meeting and in our follow-up that we had put out a survey to the members about what they thought some of the most important emerging issues are. And rather consistently, a number of you responded that fraud was an issue that a very big emerging issue. And so we decided to follow up upon that. As a reminder, any of the views we express here are our own and not necessarily the views of the PCAOB or other affiliated organizations we work with and for. So with that in mind, what I'd like to do is just lead a discussion, and I'd like to ask everybody if you could try to keep your comments to less than 2 minutes, just so we can try to hear from as many people as possible. We have 4 groups of questions, and I think we'll just try to do about 10 or 15 minutes per slide if possible. Can someone advance the slide, please? Great. Okay, so in the materials you received, one of the first questions we thought that would be relevant is to discuss what existing or new standards could be enhanced to increase the auditor's focus on fraud detection. And a couple things that we discussed in our subcommittee is that in some cases, it seems that auditors don't have a sufficiently clear understanding of the client's business operations at a more granular level. And so we were brainstorming how to improve that kind of understanding. In addition, that there may not be sufficient transparency in the audit report about the fraud risks and how the auditor addressed them. And thirdly, that some of the existing standards focus a lot on the risks of misstatement, but don't seem to emphasize fraud risks enough. So these were some of the ideas we discussed in the committee, and I'd like to open it up to members, and I think Jessica is going to call on the members if I'm not mistaken. Is that right, Jessica? No, not hearing from anyone.
Jessica, you're muted. If I don't know if you can hear Preeti or myself, but I think she's ready to take questions on this first question.
Maybe Preeti, if I could, while we're waiting for hands, one thing maybe I wanted to just emphasize, and I see some hands which are good, but one thing I wanted to emphasize, and I know Preeti touched on it, that I think as our subcommittee worked through this topic and the questions, this was really in the interest of brainstorming of areas that we could see future enhancement, or perhaps based on our own observations, were topics that we thought were worthy of discussion. I did want to just mention that the paper that went with, and is public, that went with these slides doesn't necessarily call these matters all concerns. I think the slides have principal concerns, and I only mention that because I think it's important the context in the paper that goes with it again, all in the interest of brainstorming, enhancing, trying to think about what other standard setters might be doing. I thought we had a good dialogue around all of these discussions, but in the event anyone sort of focuses on concerns, I'm not sure that, certainly I don't know that all of these are concerns, notwithstanding there are good ideas and things that I think are worthy of consideration. So I just wanted to add that perspective at the outset.
Thank you, Brian. Can we, Jessica, do you want to call? I don't know whose hand was first.
Steve Morrison?
Good morning, everyone. I had 2 hours of comments prepared, Preeti, but I'll cut it down to 2 minutes to honor you here. I guess so. At the end of the day, this error, fraud, this is all very important. I understand the focus here. My overall caution here is not to create a super focused, fraud only focus to things, and that such that it would distract the auditor from the concept of, are these financial statements materially misstated, whether by error or fraud? And my personal view on thinking this through about how you improve this is the re-emphasis on proper risk assessment. And so that every time somebody looks and says, hey, here's something what could go wrong? That reasonable possibility of a material misstatement, that they have two lenses they look at it through. Could it be wrong because of error, or could it be wrong because of fraud? Now, obviously, fraud you may have additional bolt-on items that go along with it, but I think if we focus too much on making this a fraud exercise at the expense of error, it could damage the public interest and audit quality overall. So my overall thought is to keep this as cohesive as we can in the concept of traditional risk assessment, as opposed to creating fraud focus, adding fraud items to the audit report, but really focusing on that, are these financial statements materially misstated, and reemphasizing to auditors to not just think about, are they wrong, but think about, why are they wrong, error or fraud, and what could go wrong in that sense. Those are my thoughts.
Thank you, Steve. I also want to let everyone know that we do plan to send out a survey afterwards. So if we don't get to hear your comments, or you think of comments later, there will be a way to communicate that back to us as well.
Christine Devine?
Thank you. And Steve, your point is very well taken, and one I was going to mention as well, which is keeping it into the context of risk assessment, because clearly the fraud risks are critical to the overall risk assessment process. I do support modernization in this area, but I think in general, the standards are fit for purpose. They can be adapted, if you think about them, to today's situation, and I think they can be adapted to future situations. I would encourage, though, in this area, potentially considering interpretive guidance by the PCAOB to issue that, to really help auditors understand what are the best practices in this area. So an example of that might be best practices for fraud brainstorming sessions, or for fraud inquiries, or for use of forensic experts. And another idea might be, in addition to this interpretive guidance, having an established consultation process at the PCAOB, whether honestly it's for this issue, it could be for other issues as well, but in the fraud area, where auditors get real-time guidance from the PCAOB on fact-specific issues, similar to how the SEC uses their consultation process. And then lastly, another thought might be to have a library, that the PCAOB would publish a library that has industry-specific examples of fraud schemes and fraud risks, and that could help the auditor be able to, glean information from those examples.
Fantastic.
Thank you.
Keisha Williams-Smith?
Well, good morning, and thank you for this opportunity. And I really want to somewhat follow on what some of the other commenters have said, but from a little bit different lens. When we think about fraud, and even looking at the principal concerns listed in this document, it's about auditors not having, efficient or sufficiently understanding of the client's business, the enhancement of their understanding of fraud risk. But at the end of the day, fraud is perpetrated by people. And so to introduce a concept, most of us are familiar probably with the fraud triangle, but there are researchers in the academic space that have really kind of broadened this to talk about a fraud diamond and assessing capability. And so this is from the research from Professor Dana Hermanson. So one consideration in terms of enhancing standards, and to Christine's point about interpretive guidance, maybe having some additional thoughts around capability, meaning assessing top management, because usually in the space where we're in with those significant financial frauds is being executed at the management level. So are there other prompts or aids or decision questions or things that can be shared so that auditors not only assess the business, but also the individuals about their capability that might have a heightened fraud risk? And that is something that I think the standards right now don't currently speak to, but might be helpful in assessing the people around that. Not saying we're trying to go get personality assessments and not trying to do things that's significant, but again, just trying to get an understanding of the capability of those individuals, whether it's lack of controls, just their management style. But I think there is something there from the human aspect that could be enhanced to deepen the auditor's understanding. So thank you so much for this opportunity to share.
Thank you, Keisha.
Lynn Turner.
Thank you. Preeti, I do think that this issue of knowledge of the business is critical and important and just isn't emphasized enough in the standards today. That's not to say the standards don't require you gain an understanding of the business. In fact, in the planning process, it's the fundamental foundation that paves the way for the rest of the work you're going to do. But time and time again, we're seeing where the auditors didn't understand the operations that the business was engaged in, and as a result, just missed the boat. If you don't understand the business, the risk assessment that everyone talks about here isn't going to happen. You got to understand the business to fully know it and to make the right type of risk assessment. So it actually has to come before the risk assessment is ever done. And too often we're seeing that staff are sent out to as part of the planning process to document the understanding, and the people at the top just aren't getting involved enough and bringing that level of expertise that is necessary to make the right type of assessment of risk. So in all the major frauds that I've looked at, it was clear that the auditors didn't grasp, including at the top, what was going on with the business that gave rise to ultimately what would become a fraud. As far as other things that should be done, I refer you back to the O'Malley report, which has an excellent number of things. And one of the things they talk about, for example, is identifying who on the audit team are actually going to be responsible for carrying out the fraud part of the audit, and regardless of whether it's in a separate fraud section of an audit, which O'Malley, the panel, recommended. And keep in mind, O'Malley, the chair, was the former chairman of PW. So I think you'll find some very good things in O'Malley, but one of the things they say they found when they inspected over 60 audits was the people who were supposed to be doing the fraud-related auditing activities were not identified as being responsible for that. So while we have these sessions, fraud discussion sessions up front, people walk away from them without any assigned responsibility for carrying out the activities that you want to do. And O'Malley said, you got to identify those people and tell them exactly what you want them to do in order to be successful. And unfortunately, as we've seen and have been discussed in comment letters to the board, independent audits are finding fraud 4%, something like that, percent of the time, whereas whistleblowers, it's up around 40%. And yet we paid $17 billion for the audits of these public companies last year. And I'm not sure if we were to do a rulemaking today with respect to audits, external audits of financial statements, that rulemaking could meet a cost benefit test that Congress has to be done today, given the magnitude of what we're paying out and the percentage of time that these audits are actually detecting fraud. And I think we have to turn around and think about that. And of course, SOX required the whistleblower programs be put in place. But again, time and time again, as is mentioned in the IAG comment letter to the PCAOB on NOCLAR, just as the auditors aren't gaining an understanding of the business, they also aren't gaining an understanding of the whistleblower programs, whether they're really independent and how those complaints are addressed, who they're addressed by, and how they're resolved. And that really does need to go into what really has to be an updated fraud standard. Interpretive guidance isn't even going to get close, and with that we're going to continue to have the 4 versus 40-some% difference. And I just challenge you to show me the cost benefit that says that's worthwhile.
Okay, thank you, Lynn.
Jennifer Joe.
Hi, good morning. Thank you. I'd like to make 2 comments with respect to the background materials and the questions we received. First was the suggestion that potentially forensic experts, the addition of forensic experts to the audit could make the audit more effective in detecting fraud. I'd like to draw your attention to the board's Ketchakova and Robinson paper in TAR, which actually took very experienced forensic experts and had them design steps to detect fraud. They were not cost effective. So they suggested many more interesting procedures, but they were not good at spotting and identifying fraud any more so than the members of the audit team. So it doesn't seem like that's a good way to use effort on the audit engagement. What seems to be the problem from judgment and decision-making research is that fraud is not salient to auditors because the vast majority of the audits that they work on, they are not, familiar with fraud, they don't encounter fraud, they're not identifying fraud. And so fraud is not salient. Also, if an auditor spends time trying to work on, they think, a red flag that indicates fraud, but then it turns out that it is not fraud, the auditor themselves is individually punished for being inefficient. So 2 suggestions come out from the literature. One is that fraud should be made salient at the beginning of the audit, and research is finding that the audit teams are not executing the standards which says every one of the audit teams should sit at the beginning of the audit and brainstorm for fraud. That is not happening. 2, within the audit work program itself, as to who is responsible for fraud, it should be clear in the audit work program, every aspect of the audit, that the step is considering the risk of fraud. And when it becomes more salient and auditors are asked to think about it in the procedure that they're working on, they're actually pretty good at doing it. And there's a paper by Hobson, Peacher, Ventacama, and I can't remember the others in JAR that shows that. So just giving that prompt.
Thank you, Jennifer.
John White.
Good morning. Um, I really had a question for the group rather than a comment, and I guess it's what to me at least is kind of a threshold question, and that is what kind of fraud is the target of the audit? Um, I've looked at this 95-page report that was attached to the materials for this meeting, and I think it was attached at an earlier SEIAG meeting as well, with the one that talks about only 5% is or less is found by the audits. And I guess I'm just confused. What is the type of fraud that is the target of this of the auditor's work? And I mean, it's you've got to figure out what's scoped into the audit as the starting point. And I guess I don't understand what that is because you got to figure out what's scoped in because that's what you're looking for. Anyway, so I'm as much as anything have a question for that. That's my question for the group.
So John, I presume that's a question not specifically to the subcommittee, but to everyone.
Well, yes, although if somebody wants to comment on it, that would be fine too.
Okay. Well, all I can say is I think when we tried to look over the materials, that one of the documents we had considered had various types of fraud, like asset misappropriation. It had financial statement fraud and a few other categories. So I suppose when we discussed it in our subcommittee, we didn't try to separate these types. Although I take your point that it is worth considering, should there be a more focused approach on one of the types of fraud, but I don't think we did. Jim, do you want to jump in?
Yeah, John, I think you're right. I think you're right on the conversation that we had. If I'm recalling the report and I don't have it in front of me, it was, the average was in the 3 or 4 million neighborhood. But if you looked across all industry, and Dane Mott maybe can help us with this because I think you know this statistic, there was some commentary that 5% of revenue across industry is at risk of fraud. And so we kind of looked at one being very small. And to your point, you may not pay that much attention to it from a materiality standpoint, but if you stood back and thought about whether 5% could actually be the number, then you'd be concerned. Dane, is that close to what we talked about?
Yeah, I mean, I think that's fair. I mean, what I'd also say too is we have a lot of questions to get through in this session. So if we kind of add more questions to it, we're not going to have a lot of time for the prepared questions. But, ultimately, from an investor's perspective, fraud's fraud. Ultimately, someone's comments earlier around like the fraud triangle and, ultimately, a part of fraud is the intention to deceive. So, to me, all fraud's material. And, from an investor perspective, anything that is destroying capital is a problem. And I think all the categories in that report are relevant from an investor's perspective. So material is, did it occur? And, I don't think the distinctions are particularly important from my perspective.
Thank you for chiming in. We'll continue on with questions, and it looks like we're getting comments on all the 4 questions, so I think we'll just continue on.
Great. John Bendel?
Yeah, thanks. Preeti, I think the subcommittee did a great job. I thought the materials were really well done. And with question 1, the principal concerns, I agree with what you guys laid out. The one thing that I was thinking in addition to what was here, and there was a comment on risk assessment earlier, and I think that is really important, but there is a lot of guidance already out on risk assessment and controls and how to think about that when you approach fraud in the audit. So my perspective was some standard setting more on the substantive procedure side. I mean, I think, there was, at least from my perspective, something where, the auditor is given more guidance on the types of substantive procedures that would be valuable in detecting fraud where there is a risk of material misstatement or misstatement from fraud. And trying to integrate that more into the standard if we were going to go down a standard for fraud. And I also think, the concept of engaging with the audit committee on that as well. So if you're not performing those procedures, why not? Like what procedures are you going to perform? The PCAOB has a lot of great access to what went wrong with different frauds, industry research they can do. they could help use that to craft the type of substantive procedures in different circumstances with different risk indicators that could really drive additional real substantive audit procedures. I think that is going to have a big impact. I saw later on there was some discussion around, getting more integrated with whistleblowing and things like that. I think that's really important as well, because there can be a lot there that could be a red flag. But I also think just core substantive work, if you follow a controls approach, you're going to be trying to catch the people that are perpetrating the fraud by looking at the controls they're circumventing. And I think that's probably why you see really low detection. But if you're doing your own substantive work, I think, higher degree of likelihood. So I think focusing on that, it could be by industry, it could be by risk, and it could be, developed over time based on the PCAOB's research, I think would be something that I would be certainly in favor of.
Okay, great. Thank you, John. So if you have comments on the other questions, feel free, just because I don't think we're going to have time to break it up.
Okay. Josh Jones.
Thanks, Jessica. I mean, just quickly, I'm obviously very supportive of the effort to think about enhancements to the fraud standard. I guess one of the things I thought that came to mind is, and we've talked about this as a group, I think over a couple of meetings, is really how we can harness the power of data and technology, which I know are topics on the standard setting agenda from a research perspective, but we're evolving daily on our ability to further leverage data and technology in the audit. Really can help deepen our understanding of the business, understanding which further gives us opportunities to really identify where there is an opportunity to commit fraud through our ability to look at where journal entries come from, who's making them, what are booking patterns, all of those things that are, I think, contemplated in existing PCAOB standards, at least at the conceptual level, but really have opportunities to really bring to life how, firms, auditors, even companies can leverage that power to help, one, further appreciate where there are risks, appreciate the opportunity to evaluate kind of how controls may operate, as well as, further the ability to execute, procedures to identify where fraud could have occurred. And so if there's ways to, I think all of the firms probably have developed some techniques they use today, and I think ways to shine a light on how that has been used today, and find ways to emphasize that or highlight that either in the standards or in application guidance, I think could be pretty powerful to help move the needle from a fraud risk assessment and detection perspective.
Thank you.
Sarah Lord.
Thank you. And I want to just start with agreeing on the concept of making sure that the procedures are risk assessment based. So anything that gets added to an audit that is just always what you have to do very quickly can become kind of a checklist routine response that's not adding value. Actually, John, I loved the way you explained everything that you talked about and how the PCAOB can also help with driving some of the procedures, but helping do that in a risk-based perspective, because I think that really helps people taking that understanding of the business and then going through and doing value-added procedures. The ASB has been doing a lot of research in this area because we're seeing the standard setting happening at the IAASB, this agenda topic, and then trying to evaluate what we want to do with our standards. I know we've talked at past meetings about some of the research on transparency that's already available. At our last meeting in October, Greg Jenkins, who's a professor at Auburn University and an ASB member, presented research that we've been doing over the summer that he's just finished, where we've interviewed forensic experts on what procedures they do in relation to an audit, looking at, and Jennifer, I thought your comments were great too, of what's actually valuable and then what's cost effective. Now, there's certain things you can do that take 5 weeks of 6 people to go through maybe an email dump that's not cost effective in the context of a financial statement audit, unless there's some overriding reason that that really is important. And so we're excited to share. We've been reached out to Barb Vanich to work with OCA and share some of our findings, and she's been very receptive to that. So we're working on scheduling it, and also I guess would be open to kind of, I don't know what the right mechanism is, obviously not in the 2 minutes we have today, but in doing an open roundtable or some sort of sharing more broadly with SEIAG, because we do think this is just an important topic that there should be lots of open discussion on, so that as we do standard setting, one of the things we always worry about is widening any expectation gap. So as you increase transparency, as you increase the procedures to be done, how do we make sure we're doing that in a cost-effective way that actually gets investors better information? And so really open to whatever the best way is to do, but have been very excited about some of the research we're seeing and being able to put that into the standard setting process. So we work together to get a great outcome. Thank you.
Thank you.
Robert Neckel.
Morning. This has been a fascinating discussion. Given my age, some of this is like deja vu all over again. But I think one of the things we should keep in mind is there's two sides to a fraud. There's the human side and there's the technology side. Let me just say a couple of things about the human side. We've heard a lot about that in these comments. And I think it's very important to realize that the auditor needs a depth of understanding of the incentives, motivations, forces at work, and so on within an organization. I always tell my students, most people don't get up in the morning with a plan of committing fraud. Usually there's forces and drivers behind why someone does fraud. Usually they start small and get big because they inevitably get big. So we have tools like that, and we could make it more salient through risk assessment. But I think we also have to think about the technology of fraud, which I think has evolved quite a bit over the 40-some years I've been doing this. In the good old days, if management wanted to commit fraud, they just did it internally. Now it often involves over-the-horizon counterparties that are not so easy to observe from the day-to-day trenches of an audit within a client. And I think this actually is going to tie into our service organization conversation, because I think this is an area where we actually could use some more guidance on how to deal with counterparty risk given the modern technology of business. Now, given that the technology of fraud has evolved, I mean, for example, FTX, if you actually tear it down to its roots, it looks a lot like the tulip bug crisis frauds of 1600s, with basically intangible assets, not touchable, not manageable. Nobody can see them, valuations being manipulated. But the technology obviously is very, very different. So the technology of fraud has changed. And that's where we could actually use some guidance, I think, because it's very hard, I think, to keep up. Because one thing that we sometimes forget is whenever we have a fraud that comes out and gets discovered and gets dissected and discussed, auditors are not the only people learning from that. Potential fraudsters are learning from that. And the more you hardwire, for example, substantive requirements in the audit process, part of that is you're giving guideposts on what not to do if you want to commit fraud, because that's where it's going to be found. So I think that some of these issues need to be addressed in a high-level conceptual level and in deep understanding of the forces at work level. I'm not sure that standards per se with substantive guidance are going to solve the problem, except for keep pushing the ball down the hill, up the hill a little further, as we've been doing it for 40 years. Thank you.
Thank you, Robert.
Brian Credo.
Thanks, and certainly wanted to let others go first since I am on the subcommittee, but also wanted to be able to express some of my own views. And I too agree this is a hugely important topic. Obviously, in addition to this subcommittee and the PCAOB's long focus on this topic, there's the IAASB, ASB, and others. And certainly at my firm, one of our 12 recently announced actions to enhance confidence as we think about the future of the profession focuses very much on fraud, and we're spending a lot of time thinking about what we might do incrementally different than what we do today in the confines of the existing auditing standards. I couldn't agree more that risk assessment is hugely important here. Just performing incremental procedures that aren't appropriately focused on risk, to Lynn, your point, would add yet incremental costs to audits that might not have sufficient value relative to their likelihood of detecting fraud. So really doing anything incremental or even what we do today really should be sufficiently based on risk and a thorough understanding of the company, their processes, the people. Like all of that is critical to designing appropriate audit procedures that, again, achieve the intended benefit. The other aspect of this that I would mention is we think about further involvement of incremental time and of specialists. Again, risk assessment is key to that, whether that be in helping us think about risk or whether that be in helping us think about how the questions and how we conduct interviews relative to fraud inquiries. And then I would say just on the auditor's report, I do think there's room for progress and incremental disclosure relative to the kinds of risks that auditors think about in the context of fraud and the kinds of work that's done. Although I do caution, I know some have suggested perhaps mandating CAMs or including more in CAMs, either voluntarily as a path forward. And I would just go on record that I believe CAMs, as they are reported today, that focus on things that are especially challenging, subjective, and complex, have more value when it's not just a listing of things, or it's not just things that one's doing in the audit but don't necessarily meet that threshold. So I think the informational value of CAMs could be deteriorated. That's not to say there aren't other places in the auditor's report, or if the fraud work does in fact rise to that level, it could certainly be a CAM, but there could be other places in the auditor's report, which we're exploring as part of our actions, where perhaps incremental information could be appropriately described in the context of the work that the auditor performs. So again, I'm very supportive of the work that's being done here and the brainstorming around this. I also do agree that there are limitations to how much could be done through standards, which is why I think it's important initiatives like the one we're undertaking to think about how we advance relative to what we've learned over years, and in the context of existing standards is important to proceed on in the interim. Thank you.
If I could jump in here, Brian, I don't want to put you on the spot, but I would be interested if you could go a little deeper in maybe what you think could be done in the auditor's report, given there's lots of discussion, at other standard setters and whatnot.
Sure. Yeah. Thanks, Barb. Yeah. So I actually think that some degree of disclosures about either or both fraud risks or the types of procedures, not just boilerplate kind of copying from the standards, but the kinds of procedures that were performed either in responses to those risks or just generally to address fraud, potential risk of fraud at the company, could be informative and meaningful to a better understanding not only of the auditor's work, but responsibilities, but again, what was actually performed in the context of an individual audit. So I could see that kind of disclosure, again, without taking away from a reasonable assurance opinion, which is also important, right? Because we don't want to turn this into something that sounds more like, well, specified procedures or putting one on notice of kind of limitations in some way. But I think in the context, and you could tell me, Barb, otherwise, but I think in the context of your existing standards, there's probably more we could voluntarily do there, and there's certainly more the PCAOB could promulgate if appropriate. But I just caution about it being something that takes away from other important disclosures like CAMs, where it might not be appropriate to do so. And I also think it needs to come with the right language around it so that readers, just like companies' risk factor disclosures today, readers don't misunderstand why we would be disclosing some of that and assume something they shouldn't relative to the likelihood of fraud being greater just because we had incremental disclosure. And so there's a lot to think about here. And, I think it needs to be done with caution, but I do think there's progress that could be made.
Thank you so much.
Thank you, Brian.
Lynn Turner.
Yes, thank you. One of the things that Brian just mentioned got my attention, and that is on the audit report. In August of this year, the appellate court in New York, which from a securities market perspective is probably the second most important in the country, issued a ruling that states that the generic language that's used in the audit report today is so generic that it is not material to an investor. And that was very disturbing. They're going to rehear it, I think. I hope they do anyway. But it does highlight that the language in the audit report today is just flat out too generic and needs to be revised, and raises the specter of audit reports aren't material to investor. And that's contrary to the longstanding position of both the PCAOB and SEC. I think the court had it wrong, but in that regards, my opinion doesn't matter. So it's going to be very interesting to see what happens with that. But I think it does send a clear message to both the SEC and PCAOB that the audit reports as they're done today just can't be allowed to stand. And because if they're not material to investors, why are we going through this hassle in the first place? With respect to the audits and the risk assessment, many of the audits that have been instances of major financial statement fraud, the auditors were aware of the fraud in one form or another. We're aware of inconsistent evidence, including in the audit work papers, and then failed to act upon that. And that's one of the issues that the PCAOB really needs to address. Why is it that auditors become aware of these type of frauds and then fail to act upon them? So it isn't necessarily the auditor didn't know it. If you go through them, and in fact, they're in the IAG comment letter on NOCLAR, it has a handful of examples of where the auditors were aware of problems, but then didn't act on them. And you have to ask yourself why. To some degree, Brian and I are in agreement in that the procedures need to be the right type of procedures. Just heaping on more things to do won't necessarily result in a better outcome. For example, when I chaired a public entity and the audit committee, the Big Four auditor said they wanted to bring in their forensic experts, which I thought was great, very supportive of it. But I wanted to hear what they were going to do. So we got on the phone with them. And what they told me was they're going to go sit down and talk to the CFO and CEO about fraud risk and what was happening. And my comment to them was, well, the CFO and CEO are involved in 85%, 90% of the major financial statement frauds. So what you're telling me is for the additional audit fees I'm going to give you, you're going to go talk to the two guys that are most often involved in leading the frauds. And I can guarantee you they aren't going to tell you they're doing a fraud. So we redesigned the audit procedures to be more effective. And I think that the PCAOB has to think about that. Is the audit procedures that they put into an updated and revised standard that's badly needed, are they going to be effective? Are they going to take that 4% and increase it up? I too don't want to just add a bunch of cost unless the procedures are going to be effective. And when we did the IAG comment letter on NOCLAR, we tried to identify that. We had actually gone into cases where the auditors were aware of problems but didn't act on them. And I think that's the type of analysis that the PCAOB needs to do. Finally, with respect to procedures, we're hearing a lot about AI. It seems to be the current great idea of the moment. But what we do see, and the IAG commented on this in their letter on technology, is that if you're going to use technology, you also got to use it to access outside external databases that have fantastic evidence in them. Wall Street uses them all the time, that provide inconsistent or may provide inconsistent evidence with what the management team is providing you, that will allow you to then go investigate some of these areas. And so we need to enhance our use of technology, but it's got to be technology outside the company's databases. Thank you.
Thank you, Lynn.
John Lakomnik.
Thank you. I also agree with what everyone said about substantive procedures needing to be risk-based, and particularly John Bendil said. So I had actually thought of three that I would like to specifically mention. One, gets to the heart of whether or not the auditors understand the business, and that is understanding ratios of the business versus peer groups. So for instance, in Wells Fargo, when you say, what's your competitive advantage? And you have some multiple number of linked accounts and you don't ask why, that seems to me to be a screaming issue, particularly when you look at something and you try to understand the compensation initiatives, incentives, and you understand what that was doing and driving towards a fraud. No other bank could get to those ratios. Why are you able to get to those ratios? I had that when I was on the WorldCom Creditors Committee, and I had other telecoms come to me and say, we could never figure out how you got to your margins. We never just thought you were faking them by capitalizing expenses. So if you just understand the business, say why, what is your unique advantage that enables you to be an outlier on the positive side for some of these ratios, you start to understand where the fraud risks are. The second one, you have on your second slide that the conversation between auditors and management and the audit committee is mechanical vis-a-vis fraud. Well, if you ask a yes/no question, are you aware of any fraud? Of course, the answer is no, because if I were aware of fraud, I probably would have done something about it, right? As an audit chair. I had a wonderful conversation with our auditors. I said, let me rephrase your question for you. If I were going to commit fraud at this organization, how would I do it? That forces the auditors to think, and for me to think, about where the weak points are, what outside entities would have to be co-opted, how would I do it, etc. And I was told, and this is a Big Four auditing firm, that it was the most robust conversation about fraud risk they'd had with an audit committee chair all year, simply by changing it from yes/no question to how would you commit fraud if you could, right?
Yeah.
Where are the weak spots? Last, there was a comment, there's been a number of comments about materiality, and each one has implied quantitative materiality. I see this throughout the audit industry. People look at numbers and say something's not material. Obviously, we all on this call will say, of course, there's qualitative materiality. But I think one of the places that tips off things about fraud are in things like legal reserves that are below the materiality level. Auditors ought to understand what those legal reserves are for. If they are for repeated settlements of sexual abuse cases against the CEO, if they are for, repeated fines that can relate to FCPA, if they are for whatever, but they're 1/25th of 1% of revenues, it's irrelevant. As Dane said, fraud is fraud, and particularly the idea of qualitative fraud as it affects the C-suite or a named executive officer. And so I do think that one of the other things that a procedure is best practice is, even when there are non-quantitatively material reserves, understanding why they're there and if there's a pattern. For instance, in Wells Fargo, there was a pattern of settlements. If there are a pattern of settlements, to understand what is going on. So those are three very specific things that I would suggest: ratios, changing the question at the audit committee, and understanding what certain types of reserves are there for from a qualitative materiality standpoint. Thank you.
Fantastic. Thank you so much.
Susan DeRoss.
Yeah, hi, thank you. I think I'm off mute. Yes. First, thank you to the subcommittee. This materials were excellent. When I read through these, I can't help but to think back to the morning conversation. The data that you have here is very indicative of the top concealment methods being physical documents and electronic documents provided by management. So I think that this really does go back to overall risk of material misstatement, whether it's intentional or unintentional. this morning's risk, when we were talking about 2310 and confirmatory bias and how to handle some of those things, I think that a lot of those things could really come into play in identifying and challenging things that might be risk. I have just a couple of examples of things that we could consider putting in guidance. I know that it's difficult really to test some of those management inputs, but you can go about testing those if you assess historical shifts within that management's operating procedures. You can also use external, proxies and policies from other comparable type companies and try to look and see the patterns. I mean, this can be done semi-manually, or it can certainly be done with technology. So I would suggest, really even addressing that by adding more to 2310 that would speak to that, even in terms of just guidance, I think would be helpful. And then just one last comment on John's comment about asking management how they would do it. I like that question. And that's probably a good question that everyone should be asking. And then the follow-up question should be, did you consider all of the things you just told me in developing your fraud quality control procedures? Because that's really where it stems from. Those are my only thoughts. I love all the comments. Thank you.
Thank you so much, Susan.
Dane Mott.
Thanks. And as a member of the subcommittee, I'll try not to talk too long because a lot of our views are expressed in that document. But I want to double click on a point Lynn said. I really do think it starts with understanding the business, and I think there it's really having a significant understanding of the business. It's one to say cursorily like, oh, we know that they do this, but really understanding the business in a fundamental way, and everything else kind of flows from there. Because then, stage one is like, okay, fraud detection. We think fraud detection should be part of I think fraud detection should be part of the design of the audit. And, I am personally of the view, I do think it should be a CAM as well, because if it's a CAM, it kind of reinforces that responsibility and says, take it seriously. We have an understanding of the business, and based on our understanding of the business, if a fraud were to occur, we think it could occur in these types of areas. These would be the most damaging types of fraud. So that is kind of the starting point. And then also, as Lynn said, I think the O'Malley report, a lot of time and resource and brilliant minds went into that report 20 years ago. There were a lot of fantastic recommendations in there. A lot of them haven't been implemented, and it's probably worthwhile dusting that off and looking through and saying, hey, are these low-hanging fruit? For example, hey, who is responsible for taking on the responsibility for the fraud section of the audit? Or, because you think about it, with SOX making CEOs and CFOs sign the financial statements, when your name is associated with it, you ultimately take the responsibility more seriously. The other big issue is whistleblower. Whistleblower, we can think of two different sides of it, and where the PCAOB could be helpful on both sides. First of all, I think the PCAOB, and they could do this, their web master could do this today, change the page on the website that says, call us, if you have a whistleblower thing, just say basically refer to the SEC program, because the SEC whistleblower program is better in two different ways. It's reward-based, and it's truly anonymous. Like, I know the PCAOB says that they're an anonymous program, but in the same website, the next sentence says, please call us tomorrow, and let's have a follow-up conversation after you submit your request, and that's not anonymous. If someone's on an audit team and they're taking professional risk to say, hey, I saw something I didn't like, the reward-based program actually provides protection because they work through a lawyer. I've talked to whistleblower lawyers in the past, and they'll use things such as voice change software to talk to the SEC, and oftentimes neither the SEC or the company know who the whistleblower is. And the only time the SEC will find out who the whistleblower is if they pay out a reward. But otherwise, they don't know who they're talking to. That actually protects the whistleblower, and you'll get higher success rates there. And ultimately, if we already know that 40% of the frauds are going to be discovered by whistleblowers, Like that's high return on investment. And that's saying that you can get that 40% higher, fairly easily. The other thing for the whistleblower program then comes internally within companies. It should be an internal control check about, like, is the whistleblower program designed well? Like, is it reporting directly into the audit committee chair? And same with the internal auditor. Both of those things should just be reporting directly into the audit chair. They should not be reporting into the CFO or the CEO or other members of management, because as investors, a lot of the most damaging frauds are the ones that are perpetrated by the C-suite. So basically having the whistleblower program report into those folks to basically say, here's what you're doing wrong, and we found something that you're doing illegal, that's not effective. So ultimately those complaints have to go directly to the audit chair, and ultimately the audit chair has that responsibility to kind of do those investigations. If they need to, hire a special investigation team, hire an independent counsel, do what they need to do, fill the authorization. But that's one thing where the PCAOB should say, hey, look at the whistleblower programs. Are there deficiencies in it? If they're not reporting up to the independent audit committee chair, like, it's not a good whistleblower program. So I will leave it there.
Thank you, Dane.
David Fabricant.
Hi, thanks. Dane, you covered a couple of things I was going to touch on, which is whistleblower. Brian, the point you made on audit reports, and we have it in some of the material, I do think there's an opportunity here. I'm not sure the users of the audit reports, the public, understand that it's reasonable assurance over error and fraud, and I think they think it's absolute assurance. So if anything, clarifying the language and making it tailored to the registrant, I think would be a good thing, so that they understand exactly what is the auditor's responsibilities here, at least as the rules stand today. The last thing I would just mention is I do think there's an opportunity for audit committees to get really serious about this. Over the years, audit committees have had more and more given to them. Now they're the Audits and Compliance Committee or the Audit and Risk Committee. It's not just germane to the Audit Committee. And Jim, I'm looking at you and I had a couple of conversations on this as a sitting Audit Committee member, and it seems like it's an afterthought when they're having a discussion about fraud and the risks of fraud and how the auditors are performing their procedures related to fraud. And there's so much other things to deal with, and it's just kind of, yeah, I know about that. It's not, we don't need to worry about it. And then at the end of the audit, they come back in with some standard questions to ask certain members, and that's kind of it. And I wonder if there's maybe even more this board could do to help audit committees ask better questions, I think, John, to what you said, and just be a little bit more educated on the way to have a thorough and healthy discussion with the lead engagement partner and the audit team on how they're planning and how they're thinking about fraud in the company.
Okay, great. Thank you, David. Since the subcommittee members are jumping in, I want to give my 2 cents on something that, since we couldn't go through all the slides, one of the things that we talked about is that we thought might be good is the oversight or additional oversight over things that are not disclosed. Because one of the problems could be that, something is left out of the financial disclosures, and we feel like maybe the auditor doesn't pay enough attention to what's actually not being disclosed and perhaps focuses too much on what is being disclosed. So as we continue to take hands, if anyone has any additional ideas on that particular issue, we had brainstormed or discussed having the auditor be present or review those decisions in some way, whether it be in a meeting or something. But I'd love to hear anyone else's ideas on that. So I'll continue back. Jessica, if you can call on additional people. Thank you.
Great. Robert Neckel.
Yeah, I just wanted to, again, give a little historical perspective. The risk assessment side of things, I think, is absolutely critical. I agree with that completely. And if you, again, look at the history of risk assessment in our profession, ISA 315 was the international standard. AS 12 in the United States came out quite a few years later than that. And a lot of discussion about ISA 315, the impetus actually came from the work done in the 90s on something that was called then as the business risk audit. It got a bad reputation because Enron followed on the heels of it. But a lot of the writings about that, we're talking about how this depth of knowledge of the client itself, not only does it tell you what, it gives you insights into how well the company's doing, but how management's likely to respond to how the company is doing. Because if you can make money honestly, you generally don't have to cheat. And so I would encourage you to go back and look at some of that writing. I wrote some of it actually, but because that predates, I think, a lot of the things that we're now hearing that we finally come around to realize again needs to be considered in the audit process and the auditing standards. So thank you.
Bob, do you think you could, Robert, sorry, could you send that to me?
I can give you some references, sure.
Okay, thank you.
John White.
I'm probably just echoing what John and David said, but this discussion with the audit committee about fraud, my sense of being in a lot of audit committee meetings is it's a 30-second discussion. I mean, it's just a pro forma question and the answer is no. And I do feel that some process here of getting a conversation going would be very useful. Because once you start a conversation and a discussion, you're going to have somebody saying, well, no, I didn't think this was fraud, but I'm really puzzled by this or puzzled by that. Or, I mean, once you get people talking, audit committee members talking, I think there is information that can come out that would be useful to the auditors. So anything that can prompt a discussion, I think would be very useful.
So Preeti, maybe I'll jump in as a member just for a second, John. We talked about the fact that, moving these discussions from the end of the work to the beginning of the work vis-a-vis the risk consideration seems to be very, very important to consider, because I do sit in many, many audit committees, and it really is quite pro forma. And I don't say anything against the firms in that regard, but it is less than a 30-second conversation. And again, because you go about these things with positive intent. You think your company is fine. You think the audit is good. You think the financial statements are fairly presented. The other thing I want to say, just to say it, is that in protecting the investors in this regard, we're also protecting the audit profession, because in every form of fraud that you ever hear about or read about, big or small, the question always is, where is the auditor? The auditor is always sued. The question is always the auditor. So I'd like to do this both from the obvious of the investors' protection, but also at some level for all of you and all of us who have been auditors to protect the audit profession, because I think it's important, because the public, below the institutional investor who is investing, is certainly asking a question oftentimes, and it is a question of, are you standing behind some things that you get to do that don't really get us there, but that protects you from your professional responsibility. Thank you, Preeti, for letting me jump in. I'll stop there.
No problem, Jim. Thank you for that. That was helpful.
Jennifer Burns.
Thanks, Jessica. I wanted to mention that as a result of the first round of ASB research we undertook, we actually did publish a Journal of Accountancy article back in January, which is titled Auditing Best Practices, What Academic Fraud Research Reveals. And Greg Jenkins, again, and some of his colleagues helped us put that article together. And I think it's hitting on some of the key points that have been brought up this morning around brainstorming, around rewarding staff for skepticism, even if they don't find something. So I just wanted to bring that to everyone's attention. I did put a link in the chat to that. Also, in the second round of research, hitting on another one of the points, having an open conversation with the audit committee is very important. I couldn't agree more. And asking questions like, have you been pressured to do something you're uncomfortable with? Or what keeps you up at night? Not going in with just yes or no questions, I think is really valuable. On the point of the whistleblower hotlines, I wanted to just mention the way I think about the PCAOB's whistleblower hotline is that an individual calls that hotline if they have some sort of issue that's going on within the firm and the way the firm is conducting audits or on an audit that they're working on. And I contrast that to the SEC's whistleblower hotline. I think you call the SEC's whistleblower hotline if you think there's fraud in the financial statements. I'm not sure if someone thinks there's fraud going on at a public entity, I'm not sure they would call the PCAOB first. I think they do call the SEC first. So I just wanted to mention that.
Thank you, Jennifer. I agree with what you said in the last point. I think what we had brainstormed was that even if you are coming forward within the firm, which I think I agree is naturally the PCAOB's whistleblower would capture, that if it's not truly anonymous and if it's not rewards based, that maybe we're not going to get the same kind of someone's taking professional risk and they're not going to come forward. So I think that's what we were thinking. But we don't disagree with you that the types of people might be reporting differently between the two.
I agree, and I think the issues you go to the PCAOB with are more firm related and how an audit is being conducted overall.
Right.
Yeah.
Right. But I think what we were trying to say is that their program is set up in a better way. And so using that as a model, and if we can't set it up in that way, is it really going to be effective? Should they just instead direct people to the SECs if they're not able to set it up like that? Because there are some restrictions, there's some legal restrictions. Yeah, Dane.
Yeah, just to clarify, like I agree. I mean, I think in an ideal world, the PCAOB looks at the design of the SEC program. I think it's best in class in terms of how it's been designed. So they attempt to adopt their own, but that might take legislation and other things that are necessary, and that's going to take time. I'm saying for now, at a minimum, at least put a reference there to someone that they can consider reaching out to the SEC, because oftentimes if it's fraud, I mean, if they're seeing something not good on the audit, it's having implications on the financial statements. So it's relevant from both perspectives. The financial statements aren't accurate and the auditor's work is subpar. So, there's issues there for both the auditor and the preparer. So I don't think it's a problem to first start with the SEC. But I mean, as it is today, if you're an auditor and you're asked to call in, I don't think that's ideal, and I think it probably dissuades some people from making the call. So at least let people know that the SEC hotline is an option for them, and at a minimum, the SEC can. The SEC already works with other agencies and forwards whistleblower claims to other agencies. It starts in the SEC and then goes to other agencies. So that's already kind of standard practice.
Thank you, Dane. Jessica, back to you.
Thanks. Sarah Lord.
Thank you. Just wanted to weigh in on 2 items. We've been talking about some of the different enhancements that could be made, like Danny said, how a whistleblower program should be designed. And I think when I was reading the paper, it did strike me that several of the recommendations are items that are really the requirement of what the issuer does. And so it would be really helpful for the PCAOB to work with the SEC in this area. So it's very difficult for audit standards to change public company issuers' behavior, right? So if that's something where there are best practices, there are certain areas we want auditors to evaluate from a fraud lens, having collaborative efforts for the SEC to say, okay, this is what we expect from issuers as well, would make that a lot more, I think, effective on implementation, and also not create maybe some pushback of companies saying, this is an audit requirement that's making me change my behavior, as opposed to it coming from the right regulators or the regulators in collaboration together, ideally. And then Preeti has specifically asked about disclosure checklist or disclosure process, and I know Dane had a comment in our chat about auditors being invited to all disclosure committee meetings. I agree with that. I would point out that depending on the size and sophistication of the company, not all have an official disclosure committee meeting. But often, almost most companies do have a disclosure checklist. They have a process they go through and say, okay, here's what's required to be disclosed within the document, financial statements, other areas. Here's what we haven't disclosed that we've determined to be immaterial. And auditors definitely look at that. And then I think adding the layer of more discussions. Are there qualitative things that weren't necessarily in this checklist that's important, and more enhancements can be made there? But it also, depending on the issuer itself, how that process happens can be different. So it may be a meeting, it may not be. It may be more documentation and inquiry and inspection. Thank you.
Thank you, Sarah.
Keisha Williams-Smith.
Well, since I've been jotting down my comments because I have follow-on comments for a couple of points in the discussion. So really quickly, first to the earlier discussion about fraud and critical audit matters and the audit report expansion, just as a point of information, during the implementation of the expanded auditors report in the United Kingdom, there was a firm that did have a required fraud key audit matter in that context. And, again, it was quite boilerplate. So I think the board needs to really think about the expansion. If there is a consideration that folks kind of fall back into some of boilerplate conversation. And if there is going to be some expansion in the audit report, really help the auditor write it in a manner that is client specific and not just a couple of extra sentences that really isn't going to add any value. So that was on the audit report. Two, a little bit about what we were talking about whistleblowers, and to Sarah's point about some of that is management's responsibility. It is management's responsibility, but for the auditor's assessment, I don't know if we have raised to the level that if you have an ineffective whistleblower program, meaning it is not designed to go to the audit committee or something, is that something that could elevate to the level of a material weakness? I mean, is that something that is significant enough to really bring it to fruition? I know an ineffective audit committee structure is something that's a material weakness, but this is just something to consider to really raise the level of the design. We're really assessing the design. And then lastly, about omitted disclosures with the advent of technology, is this an opportunity for auditors to use technology tools, especially if we're looking at large language models or something, just to maybe do some comparisons across industries? This is again to the knowledge of the company and the industry. Can they run some analysis to look at disclosures across, and maybe it can kick out some areas where an individual company is an outlier, that the auditor can then take that information and go in and have a conversation to say across the industry, it looks like you are the outlier related to X, Y, and Z disclosures, which may facilitate conversation. So this is a way that with these emerging technology tools, regardless of size of firm, might be able to use that to help the auditor assess if there are some omissions in disclosures that might be helpful for them. Those are my comments. Thank you.
Thank you, Keisha. Can I just ask you a follow-up question? So you said about the whistleblower, about the material weakness. Are you saying that you think it should be, or I just wasn't quite sure what you were trying to say?
I'm thinking it possibly should be, that if we're talking about the design of controls, and if we really think that whistleblower is a key structure in assessing fraud, if it's not, if your whistleblower program is not designed appropriately, then it can be executed appropriately. I think it may be raised to a level of a material weakness. So those are my thoughts.
Okay, I just wanted to clarify what you were saying. Thank you.
No worries. Thank you.
Diane Rubin.
I'd like to just make a couple comments as an auditing chair of public company, non-company.
Diane, we can't really hear you. It's cutting in and out.
Oh, can you hear me now?
Not really.
Try with your video off.
Okay. Is that
No.
No.
All
Do you
in.
want to put it, or put your comment in the chat box and I'll read it out.
All right, thank you.
Oh, wait, now we can hear you.
Oh.
Go ahead.
Now you can hear me? Okay. I
Yes.
just wanted to make a couple comments as an audit committee chair of public companies, non-public, nonprofits that have whistleblower programs that report directly into the audit committee. My experience in the last 5 years is that we have had a number of whistleblower comments. None of them have related to the financial reporting area. They have to do with human resource issues. They have to do with more ethical violations of the company's code of conduct rather than the financial. So we haven't had those. I do think it's a good conversation starter with the auditors to talk about culture and tone at the top and how they look at that, and just to start our conversation, the auditors will look at all the whistleblower complaints, and we will discuss it with them.
I'm sorry. Diane, you started cutting out again and we can't really hear you. I'm so sorry. Do you think
okay.
you could put your comment in the chat box and I could read it out
Sure.
after the next person goes? Thank you so
Okay.
much.
John Bendel?
Yeah, pretty couple comments. One on the whistleblower. I think Dane made a good point earlier. I do like the suggestion in the paper around how could you make it easier and more anonymous. I think with the volume of frauds that are identified via whistleblowing, I think that would be something you'd want to do because it would be something that wouldn't be too difficult, I would think, and could encourage and potentially result in the discovery of more items. The other thing that I was wondering if it might already happen as part of the PCAOB review of the firms, but is there a way that, from a PCAOB perspective, the firms can have the right log or the right sort of listing of those things that are raised, in-house, what are they? That way it could be fed into the PCAOB as part of their inspection process or how they look at the governance of the firm. Like, are the firms gathering and aggregating those whistleblower activities that occur within the firm that maybe aren't making their way to the SEC or PCAOB? And that would be something that the PCAOB could use to look at from an inspection perspective, because if the firms have those logs centrally and recorded, that could then focus on an inspection to go in and look to see if that was dealt with. Or it could tell you if there's nothing on the list, is there enough skepticism here? Because that would tell me something as well if there's not a long list of things, because people should be skeptical, and there probably should be a lot of things on there that are concerns. So I just didn't know if there's a way to integrate that into the way the firms report and the way they gather information and then share it with the PCAOB so they could look at it from an inspection perspective or, the overall controls within the firm itself, because that could be telling on multiple dimensions. If you didn't want to maybe do an expanded whistleblower program, I would probably think of something both, but there probably is something at the firm level that might be possible too.
Okay, great. That's a good
It
suggestion.
might already happen. I don't know. It might already happen, but that was just something.
Lynn Turner?
There were some comments made by Jim Hunt and John White that resonated with me with respect to the audit committee. And I know the PCAOB does not write standards for the audit committee, but they can write standards as to what and how things are communicated from the auditor to the audit committee. Jim mentioned that these conversations around fraud and risk all need to take place at the beginning of the audit before people actually start audit work. And I totally agree with that and think that needs to be emphasized in the auditing standard on communication with audit committees. That standard was updated a number of years ago. 85% of what was in it, though, already existed, and about 15% was added in. But there are things like making sure that there is a discussion up front, an agreement amongst the parties about the risk of a particular company and audit. As an audit committee chair, I would require the auditors to give us their list of the top 5 risks. I would ask the CFO to give us his or her view of the top 5 risks, and then I'd ask him to break down the budget and the hours that we're going to be put in on each of those top 5 risks by partner, managers, senior, and staff, so we could appreciate who was actually going to be doing the work on these high risks. And I think you also need to require the auditors to tell the audit committee if their audit has been assessed as a high risk. All too often, I find out that the audit committee chairs are never told that the auditor views this as a high risk audit. And then when things blow up and all of a sudden everyone's in discovery, they find out that the auditors had assessed their risk as high risk, but never told them about it. And as an audit committee chair, I viewed it as the auditor had to have my back, but I also needed to have the auditor's back too. And by forcing people to have that conversation up front, identify the risk. In one case, I found that the auditor and the CFO didn't agree. And furthermore, probably the biggest risk we had at the time, neither had identified, but had been identified by one of the other audit committee members who was not a CPA or an accountant. He was a very good, brilliant auditor or attorney, and he brought up the biggest risk that we had, and neither had identified it, neither the auditor or CFO. And so we got the audit plan revised to make sure we covered that risk. And that discussion, as Jim pointed out, absolutely needs to come at the audit, and all too often it isn't. It shows up at the end, and by that point in time, it's too late to do anything about it. So I'd take a holistic look at this and think about that standard as well on communication, move this stuff to the front and make sure that some of this other information as far as the risk, who's doing the audit work on that risk, and whether or not everyone's on the same page as to what those risks are, needs to be communicated right up front.
Thank you, Lynn. So I'm just going to try to read Diane's comment she wrote in the chat. So she said that we use the whistleblower complaints as a conversation starter with the auditors. So I presume that she's getting these reports to the audit committee. And the audit committee and the risk committee are also concerned about cyber fraud, identity risk, and procedures to mitigate cyber risks. So she's suggesting that auditors also review the activities of the risk committee because there are many areas of mutual concern. Thank you, Diane.
So Preeti, the last hand up right now is Dane Mott.
Okay. Dane, you have the last word.
Yeah, sure. Just real quick, couple of things. You know, one thing with I get the point that not all whistleblower complaints will be related to audit. You know, one of the ideas here too is if the internal auditor is reporting into the audit committee chair, you could have the whistleblower program go in there and then at least have the internal auditor then, you know, whether it be to loop in HR or whoever for the type of things that are necessary. But, you know, the whole point there is you just don't, regardless of the type of complaint that someone's making, you don't want it to have to go through management. You know, even if it's an HR thing, oftentimes there's a reason why you want to have that design. I have a friend who's an auditor, and we were having a conversation leading up to this meeting, just saying, oh, you know, we have this topic of fraud. And he was saying, you know, an issue that he has is that a lot of auditors, they like to think of their audits as bespoke. You know, it's kind of like, oh, it's the special program that we have for this particular company. And you don't necessarily have standardization across the organization, across audit partners. And, you know, something that we've talked about in the past when we've talked about fraud in these conversations, like there's probably value for the audit firms to all have their own kind of central fraud group. And kind of to Lynn's point, you know, a group that's surveying, you know, market data, doing a lot of the same type of analytics that we as investors do when we're trying to find companies where we think there's issues. You know, develop a group that has a strong fraud expertise, because oftentimes, given the you know 4% fraud find rate from the auditor, a lot of them haven't seen fraud in their lifetime, let alone discovered it. So if you have a group that has expertise and you can have confidence that they're going to be there to do what's necessary, that's helpful. And I think it also takes some pressure off the auditor. I recognize the auditor is in a really hard position because on one hand, they're supposed to be the client relationship with management, but then they're also supposed to be expressing skepticism. And that's a lot to put on that relationship, because I think for a lot of auditors, if you were to lose a major client for the firm, that doesn't bode well for your, you know, future at the firm if you lose a major client. So to some degree, maybe this, you know, a centralized fraud group, maybe they never even meet the client. And, you know, that it's more like, hey, these are things that, you know, from our system, we see these are flags. These are things you should be, you know, looking for, have conversations with. And the auditor can have, somewhat of a good cop, bad cop discussion with management saying, hey, this is coming from our centralized analytics group, and they're saying these are things we should be talking about, and have that conversation. And someone made a good point about, the pressure of the audit committee too. I think, in terms of scope, I think there is like an effort sometimes where it's like they want to put more responsibilities on the audit committee. And I don't know that this is a PCAOB thing, but, ultimately I'd hope that the auditor's committee's responsibilities can stay pretty pure. For example, not have an expansion of responsibility to things such as like ESG or risk more broadly. If they can focus, I think you're going to have more quality discussions there. And then lastly, on the whole point about the conversations with the audit committee, I would hope there's a conversation at the beginning of the year and the end of the year. Beginning of the year, talk about design of fraud detection, ask those questions. If a fraud was going to happen, how could it happen? Get that input, then go throughout the year, do the process, and then have another dedicated meeting at the end of the year to say, okay, we did our assessment. Here's things where you could do better. Hey, we looked at your whistleblower program, and it could be designed better to report directly into you instead of, going through these other channels, or the other things that could come up. But if you have a dedicated meeting saying we're going to have our standard fraud meeting at the beginning of the year, and then our post-mortem at the end of the year, and for our look ahead for how we design next year and how you can improve your systems, that's probably helpful, and it makes sure it's not a 30-second conversation. Thanks.
So Preeti, we now have Jennifer Joe and Jennifer Burns. If we
Okay,
want.
so do we still have time for, how long are we going to? I apologize.
It goes to 11:30, but we can go over it by a little bit.
Okay, because I wanted to just take 1 or 2 minutes to summarize at the end. Okay, let's take these last 2 comments and then we'll summarize.
So I'll make my comment really very brief, Preeti. I was wondering whether the committee considered the addressing the risk of fraud within the audit of the internal controls over financial reporting. Because in looking, at the data that you guys provided, a lot of the fraud occurred because of weak internal controls. But yet, when you look at the standard on internal controls over financial reporting, it does take a very narrow focus, right, on sort of the financial misstatement aspect. What I'm hearing from a lot of the comments of the members of the SEIAG is that they seem to take an expanded view of the risk of fraud, and that is inconsistent with what the current standards provide for auditors. And so maybe as a subcommittee, you guys could look at internal controls over financial reporting standard and see how that could be expanded to address some of the concerns that are being raised.
Great. Thank you so much, Jennifer. Other Jennifer.
Thanks, Preeti. I'll be very quick. I just wanted to make sure everybody knows that there's 2 really helpful additional resources out there. One by COSO, they updated their fraud risk management guide just in May, and it includes leading practices for anti-fraud professionals and organizations intent on deterring fraud. And just as a reminder, the AICPA and IMA, IIA, AAA, FEI are all part of COSO. So that's a really helpful document. And then the Center for Audit Quality, back in 2021, their anti-fraud collaboration group issued a report called Mitigating the Risk of Common Fraud Schemes. I know that came up earlier, and these are insights from SEC enforcement actions. So I want to bring those 2 documents to everybody's attention.
Thank you. I copied and pasted them. So just to wrap up a couple things. So what I've heard today so far, there seems to be a lot of you in agreement that it could be beneficial to improve the discussion between the audit committee and the auditor about fraud risks, and specifically at the start of the audit process. Secondly, that it is still important to improve the understanding of the firm and specifically how it ties to risk assessment and addressing fraud, that's another opportunity for improvement. And then enhancing the whistleblower program and perhaps the oversight of the auditor in terms of how those programs are operating at the client level could be helpful, another low-hanging fruit. And in addition to sort of considering the PCAOB's enhancement of the whistleblower program. And then another, I think, summarizing issue is that a lot of auditors don't encounter fraud, and so maybe they simply don't have sufficient awareness, and that perhaps could be an opportunity for the PCAOB to pull together some information about fraud schemes, how they're conducted, and somehow convey this to the profession more generally, so that people boots on the ground can actually understand what to look for and what to do. So these are kind of some of the ideas. I didn't touch on everyone's idea because I didn't have time to synthesize it all. But what I want to do is encourage any of you to submit to me or any of the other members if you have specific links to something that could be helpful. We could pull that together for the PCAOB in part of our recommendations. And if you have any other ideas you either didn't get time to convey today or think of later, that we're going to try to follow up on these ideas and synthesize them in a more of a short form list, and perhaps reach out to you for a vote on that, as well as a vote from the last meeting about some of the recommendations that were brainstormed in the individual breakout sessions and the group session. We had synthesized a list of ideas, and we intend to come back to you in the next month or so to have you weigh in on that, so that we can come back to the PCAOB with not only some specific recommendations in these areas, but also some idea of how much agreement there is, or if there is disagreement, what areas of disagreement there are. So it would be more helpful for the PCAOB to consider moving forward. Okay, thank you so much for a robust discussion. No problem about not getting through the slides. As a professor, I am super used to that. I'd rather hear from you than you all hear from me. So with that in mind, I'm going to turn it back over to the PCAOB.
Thank you, Preeti, and thank you, everyone. We'll now take a break until 12:45 for lunch, after which the public meeting will resume. I would ask members, observers, and board members to stay in the meeting, but please mute your audio.